Congratulations! Your loan is conditionally approved. A SunWest loan originator is always on top of her approvals, no matter where she is. Break free with Morgan.
Welcome to The Interest. I'm Sarah Wolak. We're all looking for any edge we can get to find leads. And for some, that even means targeting borrowers who want a credit report. And it doesn't matter if that borrower is already working with somebody else. But trigger leads are controversial, and the National Association of Mortgage Brokers is backing a new bill that would end the practice. U.S. Representative Richie Torres of New York introduced a bill this week that would amend the Fair Credit Reporting Act and prohibit the creation and sale of trigger leads. Torres says the reality of trigger leads is that it often leads to more identity theft, fraud, and predatory lending. Trigger leads take place when a consumer applies for a mortgage. The inquiry to credit by a mortgage company is a trigger that notifies the credit bureau that the consumer is interested in applying for financing. Then, the trigger lead is then sold by the credit bureau to data brokers, including competing mortgage companies, without the consumer's knowledge or approval. The leads consist of names, contact information, and other data. Consumers may then be contacted by competing companies who purchase the trigger leads. NAM says this often creates confusion for borrowers and may prompt them to send personal information they may have not intended to share with other lenders. The Consumer Data Industry Association, which represents national credit bureaus and others, argues that trigger leads are in the consumer's best interest. Meanwhile, the FHFA is looking to make it harder to roll back steps taken to make access to housing more fair. These include plans that government-sponsored enterprises already follow, and a preferred language form that requires lenders selling mortgages to the GSEs to ask customers for their preferred language. The FHFA wants to codify these policies into regulations, making it harder for future presidents to undo policies put into place by the Biden administration. Coming up, an industry expert says that we need changes that encourage more special credit programs.
Tired of turndowns and wasting 25 basis points or more on slow and manual loan processing? Divorce your processor and break free with Morgan Chat AI. There are no bad deals or tough loans, only deserving families that need AI-driven fast and accurate service. We treat every client fairly and with empathy. AI that understands how you feel.
I am Morgan. I get you.
Welcome back. Mortgage lenders can find themselves stuck between a rock and a hard place. On one hand, we're trying to create loan products that can help underserved borrowers, things like special purpose credit programs. On the other hand, we need to be able to sell those loans to keep funding the next round of mortgages. Our own Christine Stewart has more on how to find a better balance.
Independent mortgage banks actually originate a significant portion of mortgages today in the market, and they don't have balance sheets.
Special purpose credit programs are a great tool to help underserved borrowers qualify for a loan. So why aren't we seeing more of them? Michael Innes-Thomas of TD Bank says the assistance alone often isn't enough.
The HMDA data shows that Blacks are denied mortgage loans more for debt-to-income ratios than any other race or ethnicity.
TD Bank offers a $5,000 lender credit with its home access mortgage. Borrowers can use it for a down payment or for closing costs or rate buy-down. TD Bank's program is a portfolio product with different underwriting standards. That means it can't sell the loans to Fannie Mae or Freddie Mac.
In order for the industry to really adopt special purpose credit programs, there has to be a secondary market outlet for proprietary programs.
It's not just special purpose credit programs. Innes-Thomas says that the industry needs to evaluate how it looks at credit in general.
There are others that are being introduced today that show that they could have just as reliable predictability in terms of default, but actually allow more borrowers to get approved.
Innes-Thomas also says lenders need to look for new ways to help borrowers. One way, offer assistance with renovation cost. Some homes become affordable because they need work.
Someone would buy it, but they just don't have the wherewithal to renovate the product.
You can hear more of Innes-Thomas's advice on Gated Communities, NMP's podcast on working with underserved borrowers. Reporting for The Interest, I'm Christine Stewart.
Thanks, Christine. In other news, if you're in California, then you need to check out our newest magazine, California Broker Magazine. Get everything you need to dominate the Golden State. This month's issue takes a look at how the state's top originators are making as much as big banks. You can read California Broker at cabrokermag.com, or you can get a copy in person at the California Mortgage Expo in Irvine on May 4th. This is one of the 3 new regional magazines from NMP. Lone Star LO, which is focused on Texas, and Florida Originator both launched earlier this year. You can subscribe for all 3 at nationalmortgageprofessional.com/subscribe. After the break, the CFPB is facing backlash after a data breach of its own.
Network with more than 2,000 attendees in Irvine for the California Mortgage Expo, May 3rd and 4th. From San Diego to LA to San Francisco, no one does it like we do. Sign up now at camortgageexpo.com.
Welcome back. Here's what else is interesting today. A former CFPB employee sent confidential information on 256,000 consumers to his personal email. And now, congressional Republicans are demanding answers. A spokesperson for the CFPB says the former employee's actions are unacceptable and he no longer works there. The data included identifying information for customers of 7 institutions, although the CFPB did not identify which ones. The CFPB requires mortgage companies, among others, to share this information as part of mandatory disclosures. And now Republicans want a meeting with CFPB Director Rohit Chopra to talk about the breach. For more on these and all of today's top stories, go to nationalmortgageprofessional.com.